Hi friends, this is the first video in a series of videos I am planning to do in this learning tutorial series. My intention is to teach you, make you aware of the common patterns most traders look for on a chart. Say for example an ABCD pattern. An ABCD pattern is the most basic and least complex of the patterns. The concept and the pattern itself is very simple to understand, which appeals to most of the traders. We can find ABCD patterns occurring frequently on charts. Now let's get into the technical aspect of an ABCD pattern. I am planning to do this video on ABCD pattern as a two-part series. In the first part, I will explain how an ABCD pattern looks like and why an ABCD pattern must be given respect. And in the second part, I will explain how to trade an ABCD pattern and the high probability scenarios when an ABCD pattern becomes more effective. First, how an ABCD pattern looks like. This pattern has got three legs: the AB leg, the BC leg, and the CD leg. The AB leg extends to a certain point, after which a minor retracement happens. This retracement is the BC leg. From C, our next leg, the CD leg, starts completing approximately equal to that of the AB leg. This CD leg would be approximately equal to the AB leg. Okay, that's how an ABCD pattern looks like. Now let me explain the psychology behind this AB, BC and CD move based on my understanding. Some good news regarding the company, or some good fundamentals of the company, or bottom fishing, etc., pushes the price up or higher till point B. At this point, those people who bought at point A might consider the stock price to be overvalued at this point, and that combined with those who might have bought earlier at this point want to sell their shares at break-even point without being at a loss. This selling pressure pushes the price down till point C. From point C, renewed buying interest pushes the price higher till our D point, giving us our CD leg. Now, you might think, how can I know when this BC leg or this retracement leg stops? To answer this to the best of my knowledge, I will put out a video as another part to this video. Continuing with this video, let me show you few examples of ABCD patterns on real charts. So now you know how an ABCD pattern looks like and the psychology behind the AB, BC, and CD move. Next, let's understand why an ABCD pattern must be given respect, or why ABCD should be regarded as a reliable pattern. This is a classic pattern that traders have been using to enter or exit trades since decades. I have read somewhere this ABCD pattern has been used by traders ever since 1935. That's a long time. Anything that stands the test of time have to be trusted and relied upon. From my understanding, traders are emotionally driven with a herd mentality. Herd mentality is nothing but a tendency to follow something that is certain. So, with that mentality on an ABCD pattern, traders tend to believe the D point on an ABCD should be the approximate level or zone to look for a counter trade and act when prices reach that zone or levels. As more and more traders act from this zone, prices can't hold up anymore but move in the direction preferred by the retail traders. This is a bullish ABCD pattern. In a bullish ABCD pattern, once the prices reaches this zone, traders would be expecting it to drop below. Okay. A possible exception to this scenario is when institutional traders or large investors join the game. These investors or institutional traders might believe this zone on an ABCD is not overpriced and they go for larger buy orders at this point in case of a bullish ABCD. So this causes the retail traders following the certainty of a ABCD pattern to lose or to get stopped out. So keeping these exceptions aside, ABCD is a high probable pattern followed by lots of traders and it works.